Hello everyone, welcome to this video. In this video, I'm going to show you one of the very well-known as well as popular methods, a very popular setup which can be taken advantage of with a lot of certainty. This method is quite well known and it has been used by a lot of traders, and this is a highly reliable way to trade. The only thing I would say is that this setup doesn't happen too often. Perhaps you can say, if for example you're trading on a 1 hour chart, this setup you will find once every month or once every 2 weeks. So though this setup doesn't occur too often, but at the same time whenever it occurs, if you are able to take advantage of it, it's highly accurate and it's highly profitable. Let me show you what this method is. Now this is a GBP USD, a currency pair on a 1 hour chart. As you can see, the market was in uptrend here. It came to this point, made a dip, went up again came back, went up again, and then fell down. So as you can guess, this is more like a head and shoulder pattern. This is the first shoulder, this is the head, and this is the shoulder. And from there it fell down. Some of the traders I know struggle a lot because even though the head and shoulder pattern is quite unique, quite powerful and is highly reliable, but there's certain points you have to always take care of before you can decide whether this is a true head and shoulder or this is something like a head and shoulder pattern where you can take advantage of. Let me show you what do I mean. If you look here, this is the point from where the first shoulder was formed. This is one dip, a high, a second dip. This high should be greater than the first shoulder because that's why it is called a head. Then it came down. Now if you look at this, the low of the, or you can call it a neckline. This neckline is lower than this neckline. Then it went again to create another shoulder, and then the currency pair fall below. So as you can see here, this neckline is higher than this neckline. In an ideal setup, both the necklines should be at the same level. So even though this neckline was low, but still it is not so much low that this looks to be fake. It doesn't. It's so this is not a fake because this neckline is quite close to this neckline. I would say if this neckline is at 16448 and this neckline is 16426 or no, I think 21, it's hardly a difference of 25 pips. If the neckline, for example, could have come here, then I would be more inclined to say that this may not be a true setup. But 20-25 pips on a 1 hour chart, that's quite okay. The one important thing that a good head and shoulder always has is that the second shoulder, which is this one, is always lower than the first shoulder. If that is the case, that means this is a very powerful head and shoulder pattern, and you should take advantage of as soon as the neckline is broken. Now the next important question comes is, which neckline to consider? This neckline or this neckline or this point? What I suggest is that trade should be placed only after this neckline is broken. For example, if you see here, this particular bar broke this neckline, and then in the next candle it tried to retest this support resistance level. Previously this was a support level, but once this candle broke this level, it became a resistance level. So the next candle tested this resistance to make sure if it would have broken and the third candle would have moved in the upper direction, that means the head and shoulder pattern is not holding good. But if you see here, the third candle from this resistance level came down again and then it kept going below. So the ideal place to place the trade would have been at the end of this third red candle. There's the first candle, second candle, and this candle. At the end of this candle, you could have placed the trade. Now some of you might want to ask this. This is a very valid question. Why not to take a trade at the end of this candle, or why not to take the trade at once this level is broken? If I look at this overall setup, this is the lowest point, this is the highest of all the lows, and this is the midpoint of all the lows. So since this comes in the middle of this, I would be more inclined to place the trade here. The reason being, if I wait for this point to happen, I'm going to miss a lot of pips. If I place the trade at the end of this, it's too risky to say. It's too risky because if you see here, the candle was touching here and then it went back up. So this level was not a very powerful area to place a trade. This could have been fake, but this candle kind of proved that once this level is broken, it's a good place to trade. If I look at this, this is more like a mid of this and this. This candle is coming right in the middle of the low here and the low here. So once this level is broken, it's a good place to place a trade. So this was broken, the next candle tries to test it, and the third candle basically confirms that the down sentiment is correct, and that price point moves down. Now this candle is very big candle because I believe the British pound is having a poor outlook because of the mortgage prices as well as the housing condition as well as the entire euro also is kind of impacted. So British pound is not having the very powerful outlook. Even though the euro, the today ISM report suggests that the dollar is also not having a good outlook. The ISM report was not as per the market expectation, so the dollar is going to be weak. In fact, I think it is weak for all the other currency pairs except for British pound. So even though the dollar was today's ISM report suggested that the dollar is weak, still the dollar on the GBP USD currency pair appears to be strong because the pound itself is even more weaker than what the dollar is. Whenever you are looking at a currency chart, the price indicates the relation of pound with dollar or any other currency pair with dollar. So whichever is weaker or whichever is stronger between the two, the market is going to move in that direction. So the pound is much more weaker than what the dollar is. That's why this is moving down. And the reason why pound is more weaker is because of the housing condition, primarily the housing condition. So now, what is my guess? Once you place the trade, then you can apply the Fibonacci level. In fact, let me count the line. So if I look here, the more I'm guessing that the pound is going to take get a good support at the 1260 to 50 level. So if, for example, you place a trade here, that's I think close to 175 pips. So as you can see, and okay, now the profit is 175 pips, and the risk would have been from this to this, which is 75 pips. So for 75 pips, you're going to make 175 pips. That's a risk to reward ratio of how much? 2.5 times. So this is a quite good setup and quite powerful. Whenever you see a head and shoulder pattern, the first thing you should always evaluate is that the head should be higher than the two shoulders. The second shoulder should be ideally lower than the first shoulder, and this ideally should be at the same line, but if it is not at the same line, this should be quite close. The second neckline should be quite close to the first neckline, if not too far away. So even this neckline could have been 30 or 35 pips away. That's also a good head and shoulder setup. But had it been about 50 or 60 pips away, then this head and shoulder wouldn't have pulled through. So thanks for watching this video. In fact, if you want to learn more about candlesticks and how to take advantage of it, for example, it was only using the candlestick we were able to find out that this is a good point. At the end of this candle, you should have placed a trade, and this candle doesn't hold good because this is a very big candle. And a big is a relative term. On a 15-minute chart, this could have been very, very huge candle, but on the daily chart, this could have been a small candle. So how to take advantage of candlesticks in a good way? Check out my course for Forex Candlestick Magic, for which I have given a link below this video. So once again, thanks for watching this video, and let me know your comments. Thank you. Bye.